Hi everyone and welcome to Before Consensus. Today I want to introduce the idea behind that concept, which is simple. Markets don't react to headlines. Markets anticipate them. By the time the headline appears, the move is often already underway. So let's test that idea today looking at the S&P 500 and the NASDAQ. So starting looking at the S&P 500 on the monthly time frame, we can see that this bull market started with the financial crisis from 2008 that ended in a capitulation in March 2009, and it had several pullbacks and corrections along the way. Looking at the headlines, you might remember the COVID-19 pandemic, that when the panic kicked in and the lockdowns started to be imposed, that was around March 2020, and that marked the bottom. And then as soon as the US Federal Reserve announced the quantitative easing, the market kept going up until the Russia-Ukraine war was another turning point that started a correction that ended when CPI, or inflation, peaked in the US at around 8%, and then it kept going up until Trump announced the tariffs, and that correction bottomed on Liberation Day, and the markets turned when Trump announced the 90-day pause on the most aggressive tariffs, and the market kept going up until the US-Iran war. That correction wasn't that significant. It was just 10% or around 9 and something percent. The bottom around, I think, on the 30th of March 2026, and then as soon as Trump announced the 2-week ceasefire talks, the market kept going up until May, June 2026. So this is looking at headlines. But now if we look at key indicators, the 21, 55, and 200 exponential moving averages, with the 55 exponential moving average considered as the bull market support band that was regained around 2011, and since then it was tested several times, but it never closed below on a monthly basis. We can see that it wicked below in March 2020, but it closed above. Then it marked the end of a technical correction in 2022. And since the 2022 correction, it has never closed below the 21 exponential moving average. So if we look further back, there are like two things that I would like to highlight. One is that when the S&P 500 closes below the bull market support band, that's a key warning signal that a deeper correction might be coming. And two, it's very rare that the correction goes below the 200 EMA. It happened in the 2008 financial crisis. It happened in the 70s. And it happened in the Great Depression between 2029 that ended in the capitulation around 1932. So now if we want to see how can we compare this with previous periods that are somehow similar, like the Dotcom Bubble, it's best to adjust to that S&P 500 divided by liquidity. So if we do that, we can see that right now we have pierced above the 2000 top. And if we go a bit further back to the beginning of the current bull market from March 2009, we have been going on an ascending parallel channel that hit a key resistance level that was previously support in 1997, 1998, March and April 2001. So support from the dot-com bubble bull market turned into resistance. We hit that level in February 2020. We did it again 2021, and again in July, August 2023, and we broke above in December 2023, and we went to test another key resistance level that was support during the dot-com bubble. We tested that level, and there was a correction, which was at the same time as the Liberation Day sell-off. So looking at headlines, you could tell what was happening at that point in time by looking at the charts. You could see that there was a significant breakout. It tested a significant resistance level. It went to test the scene of the crime, as it is called, when you go back and you retest the breakout. And then it managed to break out above that resistance level, went back to the scene of the crime, retested, and now is testing another resistance level, the 2000 top. So if you want to see or think about what can be next, the NASDAQ sometimes can act as a good GPS for the S&P 500. So if we look at the NASDAQ divided liquidity, we can see that it tested the 2000 top in February 2025, corrected to go back to the breakout level and retest it, and it went above in October, peaking in October, November 2025, retested the breakout, so turned the 2000 top that was before resistance, it turned that into support, and it went into a new all-time high by June 2026. So what if the S&P 500 is going to do the same? What if now that it's testing the 2000 top corrects in the same way that the NASDAQ did? So let's check how much the NASDAQ corrected. So if we go back here to April 2025, we can see that the correction was around 25-26%. If we look at that in the S&P 500, and if we were to correct around 20-25%, let's say if we correct 20%, that will take us to retesting the breakout from after Liberation Day. And if we were to correct around 25 to 26%, that will take us to around 5,600, which if we add the exponential moving averages, if I remove that by around November, perhaps between October, November, December, the bull market support band, the 55 exponential moving average, might be around this level. So it could be a 25% correction that retests the bull market support band before it continues the uptrend. If we look at NASDAQ divided liquidity, we can see that after February 2025, when it tested the resistance from 2000, it went on to test the 55 exponential moving average, or the bull market support band. And if we were to try to plot what might happen next, we see that after touching the bull market support band, it broke above the 2000 top, retested the breakout, and it went above. So if the S&P 500 follows a similar trajectory, it could be that we see something like this. Let me see if I add the same indicators. Let's say that the 55 exponential moving average keeps going up. And we do a retest, go above, retest the breakout, and then go on a new all-time high. That's definitely a possibility, but something I also want to highlight is that there's also a possibility that this could mark the end of the bull market that started in 2009, right? So if we were to look at, let's say that we go down to the 55 exponential moving average, and we think that that is a generational buying opportunity, and we invest during that period, but then it doesn't go up, what if then it goes down? If you bought, for example, around this time in August 2001, you would have waited for what, almost until 2005 to break even. So that is also a possibility that we go below and there's a deeper correction. So I just wanted to share with you that thought. What if a 20 to 25% correction is coming? What if the bull market continues after that? What if we retest the 55-day exponential moving average and we continue the uptrend all the way to 2030? Thank you for listening. I will be sharing more insights looking at this from different angles. If you liked the content, please do subscribe to the channel, like, comment, and share. Thank you very much.